Hey traders, checking in on the stock market today. So bears following through, breaking the low of last week, keeping their short-term control. Bigger picture, we're still watching for signs of weekly higher lows forming, but at this point in time, there is no sign that they are forming. The only hope for the bulls is going to be a potential falling wedge. I don't have high confidence in this pattern. I'm just looking at complete bear control, putting on my bull glasses and saying if things are going to shift, it would be the bear break from today lacking follow through and resulting in a falling wedge bull break. But again, that's a bit of a stretch, and just keeping my eye on the futures 4-hour downtrend, and the bears are keeping complete control as long as those lower highs remain. High of Friday, lower high pre-market. We had a nice pre-market channel that broke bear to set the tone on the morning. Right here. And then the bears controlled the day after that. You can see into the open, just an all-out dump, and then once the bell rang, it just followed through. And then we actually back-tested and rejected from previous support, then resistance. We had a big bounce, but unable to follow through. I was a bit surprised by the size of that bounce. 15-minute bull flag attempt on the S&P 500 failed. It confirmed on the NASDAQ, but did not follow through. And the S&P 500 failure gave some confidence to the bears. Again, whenever we're breaking one, whether SPY is breaking a level or QQQ is breaking a level, the other has to follow if it's going to follow through. So if you look at QQQ, you say, oh, 15-minute bull flag confirmed with zero follow through. SPY failing to break was a little bit of a clue there. We did see all major sectors hit the low of the day at the same time today on that morning weakness. It was just all out bear control. So whether you're watching the hourly downtrend on the ETFs or the 4-hour downtrend on the futures chart, it's the same as far as bear control as long as those lower highs remain. The high of Friday is a key level for me. And we had the bounce Thursday, stronger open Friday, Russia saying we're not going to open back up our pipelines Friday afternoon, leading to a dump. And so for me, if the high of Friday is resistance, we are not going to be shaping up a weekly high or low. Break the highs of Friday, and our weekly high or low is likely being set. That's a little benchmark level for me. And you can see on the weekly time frame, if we were to break that level, we have a big bull candle. That's a big if. It's a long ways away. We would need a 3% move from here. But that is a resistance level that I'm keeping an eye on for the daily perspective. So as long as the high of Friday, whatever you're looking at, if the high of Friday is resistance, the bears are in control of the daily and shorter term time frames. You're watching either the hourly on the ETFs or the 4-hour on the futures. QQQ is leading the way to the downside. We know if a weekly high or low is going to be set, the bulls likely need to see QQQ lead the way up. QQQ has been leading both major direction moves, both up and down, over the last year and a half, 2 years. So if QQQ is weaker than SPY, we don't have confidence that a weekly high or low is shaping up. We have to see that reverse. And so this is QQQ divided by SPY, showing us that consistent weakness still. We are almost oversold on the daily. The NASDAQ got right down towards that level today. S&P 500 not quite as oversold. So bulls are attempting to shift momentum and they're failing. So watching the 4-hour lower highs as our short-term guide, and if they break, I zoom out to the daily and I watch the high of Friday. Semiconductors remain weak. We've got a bear cloud hanging over the sector now, with the government coming in and saying, hey, you can't sell to these countries. And government interference are significant catalysts for stocks. Canada legalizing cannabis, huge opportunity. Obama administration saying no to private prisons, big bear opportunity. So keep that in mind, that that's not just, a little one-day news event when that happens. That takes a while to get priced in. So we knew semiconductors were our lead bear sector. They were showing us before the news came out that they were relatively weaker. In a video last week, I showed QQQ is weaker than SPY. Semiconductors are weaker than QQQ. NVDA is weaker than SMH. Just going on down the line, showing that relative weakness. And now we look back in hindsight and say, oh, it makes a little bit more sense. Some people definitely were in the know and acting on that. But low of last week held so far. 204.16 is a double bottom for SMH. Still in an hourly downtrend, so we don't have a whole lot of confidence that that level can hold unless we gain an hourly uptrend. NVDA, same deal, holding the low of last week, daily stair-step drop, and bears will be patiently waiting for a daily lower high to be looking for a bearish swing entry from here. Certainly don't feel comfortable with a bearish swing entry at these levels, but next time we see a daily bounce, keeping an eye out for that. Healthcare sector, daily inside bar, potentially a diamond reversal trying to form here, but again, keeping it simple. If we don't break the high of Friday, then bulls aren't proving anything. So holding the low of last week. XLF is a double bottom with the low of last week. We broke it by a couple pennies. Again, we don't believe that double bottom that is going counter the trend unless the bulls confirm an hourly trend change. So if bulls get over 33 here, then I'll say, all right, that double bottom is a lot more meaningful now for that trend change to try and shape up. IWM, bear break of the low of last week, week close. Daily RSI approaching oversold. Again, we're in the period right now of bear or bull frustration. We had bear frustration this whole grind up, and since Powell on that Friday, 2 Fridays ago, it has been nothing but bull frustration and a slow grind down. Not necessarily a slow grind down, but a complete control grind down, which is the opposite of the complete control grind up. So something has to shift for weekly higher lows to form, and there's no sign of it at this point. The biotech sector, relative weakness was persistent most of today. We held on stronger last week, but broke the low last week first thing. There's a gap down at 81.88, which is now filled. 78.72 next level. Look at the monthly. We're on the verge of shaping up a monthly lower high, rejecting from EMA 12, and a break of 78.72 would confirm that monthly lower high is now set. Hourly lower high is on the bounce. XBI divided by SPY shows us that relative weakness today. And bears would love to see XBI divided by SPY break this equilibrium in their favor for that relative weakness to magnify. So again, most individual names and sectors have hourly downtrends as our guide. Nothing changes as long as those hourly downtrends remain. Cannabis and psychedelic sectors, they were standing out relatively stronger 2 weeks ago, and that is being lost. CGC failed to break 430 resistance, and since then, it's down about 25%. We broke daily support. Weekly consolidation is now underway. So bulls were holding on better, trading sideways while the broader market has been pulling back for weeks, but it's now joining. Bulls would have to hold 213 and break 430 to confirm a weekly trend change if anything is going to change bigger picture. TLRY is a lead bear for Canadian cannabis, falling apart back down towards our fear low of $3. We are 6% away from a monthly bear flag confirming. Daily stair-step drop, tons of space for a daily lower high to be the result of the next bounce. US cannabis was holding on stronger. It too broke daily support today, confirmed a lower high and lower low. Weekly consolidation underway. Monthly bear flags are on the table if broader market weakness persists. Some individual names like GTBIF trying to shape up a daily bull flag, but rejecting from the high of Thursday and Friday and losing momentum today. Psychedelic names, CMPS is barely clinging on to a 1508 double bottom. We bounced nicely from it multiple times. So bulls are playing defense, but not doing much on offense. And other names in the sector breaking some supports here. So again, we're just seeing weakness, persistent weakness, and the names that were holding on stronger are fading a bit. CCJ, Uranium, daily bull flag confirmed. Huge move out of the gate in the first 10 minutes. Price shot up from the low of the day and 10 minutes later up 4% and then rolled over, giving us a big upper wick. If we break down under 27.89 from here, we lose the daily uptrend, and that would be the first indication of a monthly lower high being set. which is entirely possible, especially if broader market weakness persists. We did a great job of standing out stronger than the broader market all last week, but that can only last so long if broader market weakness persists. Other names in the sector are shaping up potential head and shoulders patterns. Left shoulder, head, and if we drop down and break support here, that's a daily downtrend confirming. And again, potentially monthly lower highs shaping up. We're not going to be convinced that those are monthly lower highs for a while because we can easily form a monthly inside bar, but the loss of the daily uptrends will show us a shift in momentum. The dollar is still very strong. That's another piece of the puzzle where if we keep seeing strength in the dollar, we don't have confidence in market bulls. For me, I'm using daily EMA 12 as my first guide and the higher lows as my second guide, but we are well above both. The metals are remaining weak. Gold with a daily lower high off EMA 12 resistance rejection. They're trying to hold the recent low, but daily is still very weak and the dollar is still very strong. So still a lot of weakness in the metals. Silver already dropped to the lower low on the weekly. Miners already dropped to the lower low on the weekly. Been talking about that weakness in the metals and miners for a long time. I'll point out when something's shifting, but until then, it's a very quick bears in full control check-in for the metals and the miners. Oil, daily bear flag possible here. We had a daily falling wedge break bull, and giving it back this significantly is a red flag. We are not shaping up the monthly high or low off of EMA 12 as the bulls would have hoped. So it's a battle for a base of support at 85 to 86 right now. We've held it 3 times in the past. We're trying to hold it again. So bulls are back to playing defense after failing to do much on offense. And natural gas rolling over as well. We had the 12-hour head and shoulders last week. It confirmed. We weren't convinced by that confirmation because it lacked follow through. But the last couple days, bears are following through. And today was a big red day. I filled up my house tank right about here. But not sure it would have mattered much. Those prices are fairly locked in. Another thing to be watching, if the bulls are able to hold 762, we'll then be watching for the potential of a weekly head and shoulders. But for now, 4-hour downtrend is our guide for natural gas bear control. And they call it the Widowmaker for a reason. Look at this 5-minute candle today. There was a little bit of news. I don't have it off the top of my head because I don't care what the news said, but it led to a 4% drop in a 5-minute candle. Use those stop losses. Short-term RSI levels getting a bit extreme, but downtrend and EMA 12 resistance is very clear. Energy sector is close to confirming a downtrend. If our daily lower high is set now at 81.02, and if we break 77.42, the daily downtrend will confirm. So with the oil and natural gas weakness, aggressive bears are keeping an eye out to see if the energy sector confirms the daily downtrend. It's been holding up better than the broader market recently, but potentially shifting a bit. So overall, still keeping an open mind for weekly higher lows, especially in names like Apple that have way more space for it to form. How about that stair-step breaking? Stair-step bear break at 171 on the weekly, and a nice amount to follow through since then. So still open-minded for weekly higher lows to try and form, but knowing that I'm not going to be entering looking for that into weakness, I have to see bulls giving me a level to play off of. So let's say we confirm a 4-hour trend change on our futures charts. If I'm an aggressive bull, I then have a stop loss to go off of. So let's just go over a rough example here. If we see these bear breaks start to lack follow through, showing some bear exhaustion, and we confirm a 4-hour trend change, I can then say, all right, that's either the weekly high or low, or I stop out because I'm wrong. And that's a level to then play off of, as opposed to trying to scale into weakness, and weakness certainly being convincing and persistent. So again, we are in a frustrating bull mode after frustrating bear mode, meaning the bears were getting frustrated, now the bulls are getting frustrated. keeping an eye on the hourly and 4-hour downtrends as our guides. Hope you had a good day. Don't forget to do good things, and we'll see you tomorrow.